What's going on, everybody? Welcome back to another YouTube video. In today's video, I'm gonna break down how I was able to make $6,700 to end the week off right. If you're new to my YouTube, you're new to my channel, my name is Nolan. I've been trading for over the past close to 7 years now. I've passed over seven figures in funded account challenges, and I'm basically documenting my journey on how I'm going to pass $5 million in funded account challenges. It's a big goal, but I'm going to go ahead and break down today's trade setup and how I was able to capitalize off the markets right before everything closed off. Okay. If you're new, there's a link in the description to a free trading community. Basically, I have courses in there. I do live trading sessions, send out my markups, giveaways, everything along those lines. Feel free to check it out whenever you have a chance. But with that being said, let's go ahead and let's get started. The first thing that I want to touch on is a big misconception. So I trade SMC, and there's a few minor adjustments that I've made over the years to be able to help me trade more effectively. But overall, the biggest concept when it comes to SMC, honestly, the biggest concept when it comes to retail trading, is that in the market, whenever you see areas like this, right, this is an equal high, meaning the market came up, came back down, came right up to this point, and then came back down again. What a lot of traders will do, and a lot of people starting out, is they think this area is now an area of, essentially where they place the exact order to sell at the market. And this is where a lot of traders get stopped at, right? So a lot of traders, what they'll do is they'll go ahead and enter here, and then they have their stop loss slightly above it here. So whenever market comes back up here again, they'll go ahead and they have pending orders at this area, and they'll go from there. And they think that as soon as market touches there, boom, it's going to go ahead and sell off. But when you follow SMC, you understand that this is actually a really key area for a liquidity sweep. And if you don't know what that means, it means when institutions grab that area, go right past it, and then they go ahead and the real move happens. So a lot of traders will have their setups like this when they see this happening. And for me, when I saw the equal highs made, that let me know that, okay, cool. This is an area where liquidity sweep most likely is going to happen. And then the real move will go ahead and take place. Along with the market also being at all-time highs, it was a clear indication that, okay, great. It's going to sweep those areas and it's going to go ahead and sell off. And so the reason why I say that is because when we go to overall for the last week and this coming week, that's what kind of helped me set up this huge trade that I was able to take, right? So market created this order block here as well as this fair value gap. And essentially what happened is that it kept on going up. We had a change of character here, which a lot of traders will also assume that now, okay, the market's getting the buying momentum, which it was, but that doesn't mean long term is buying. That just means now, at least at this point, market's looking for buys. So fair value gap is formed here, and I'll go ahead and draw that right here. Okay. So here we have a fair value gap. And again, another thing, if you do trade SMC, a lot of traders who trade this think that every single imbalance gets filled when that's not the case. Only around, according to the research that I've done, only around 70 to 85% of imbalances actually do get filled. 15 to 30% don't. Either they just don't at all whatsoever, or it takes forever for them to get filled. You have to understand a fair value gap is only valid depending upon how the market reacts to it. Regardless of the market's going to go ahead and fill that imbalance. But is it going to reverse from that imbalance or is it going to drive straight through it? That's kind of also something you have to pay attention to as well. So this fair value gap was filled right here. There's also one down here. So now we have two imbalances that need to get filled. This imbalance right here already got filled, right? Market came and shot up, fill that imbalance. Now, markets coming back up to this order block right here, we have on the 4-hour time frame to these equal highs. So if I stretch this around, a lot of traders are thinking, oh, great, this is a perfect area where I'm going to sell. So I'm going to go ahead and enter my stop loss here. So let's say if you had a trade like this, right? You enter here. Let's say your stop loss is maybe 100 pips away, and then your target is like that. Here's the thing. You would have gotten stopped out immediately. And so, as a smart money trader, what you understand is, as I mentioned before, because this is a pool of liquidity, right? Because we know that institutions looked at this area, or at least this is an area in which there was, a buildup of liquidity. Market institutions went ahead and the market went ahead and grabbed it immediately. In order for you to have won this trade, you would have had to put your stop loss around 500 pips away. And even if you take profits down here, your setup went for being, right, let's say an 8-to-1 ratio or even a 5-to-1 ratio. Now you're at a 2-to-1 and your stop loss is pretty deep. Okay. So we go ahead and we exit out of that. Now a lot of the traders or most of the traders got stopped out here. But what you have to understand is because we identified this as liquidity sweep area, we now see how the market reacted to it. Now we have consolidation here. Okay, great. Now this is letting me know that this is the optimal place to be able to enter at. Institutions are racking up their orders. They're trying to find areas in which they can go ahead and make some money in. Okay. So once that happened, boom, market came and immediately tanked. It cleared this value gap in 2 seconds. My entry was here. Okay. Once I saw the market consolidating, I said, boom, my stop loss is around 200 pips away, which is following my risk management rules. And then my take profit were two areas. The first one was this fair value gap, and the second one was this fair value gap. And as you can see, in the matter of just a day or so, market came, cleared out this fair value gap as well as this one. So my trade hit take profit 1 and take profit 2. Okay. Perfect trade setup, 6-to-1 ratio, right? I was able to catch 1,000 pips on this trade. Absolutely perfect. Perfect setup. And this is why not just knowing your strategy works is important, but also understanding the market, understanding why each move happens. Because every single time the market moves, whether it goes up or down, every single move is with intention. It is not coincidental. Okay. So we found our imbalances. We found one here and we found one here. But this from a few weeks ago was the biggest indication that the market was going to sell off. This gave us the dead giveaway that, okay, cool. This is an area where there's a lot of liquidity. We have stop orders, pending orders, buy orders, whatever the case may be. So now that we see that, this is an area in which we want to pay attention to for a sweep. We got that sweep immediately. Market swept up. Then once I saw that consolidation, I went ahead and entered into the market. Once I entered into the market, my stop loss didn't need to be 5, 6, 700 pips. My stop loss was only around 200 pips away from where my entry was. And as soon as that happened, market absolutely melted. Take profit 1 was the first imbalance at this fair value gap. Take profit 2 was the second imbalance at that fair value gap. Take profit 1, take profit 2 were both hits. Okay. Now we also have this right here. Okay. So now that the market broke this low, right? And this is just me doing extra stuff now at this point. Now this has nothing to do with the trade at all. But now we can go ahead and draw. I want to do a ray right here. We could draw this right here. So now the market took out this low. So now we have this change of character right here. So along with the sell that essentially we were going to go ahead and make, right? Change of character. So now we have a change of character. Now the market's going to go ahead and do its thing. It's going to come back up. Okay. It created this huge fair value gap right here on the downside. And you guys can see, again, I'm just explaining at this point, right? This fair value gap, market came back up, tapped it again, and now it's doing its own thing. Okay. So all I'm doing in this video is one, explaining to you the importance of understanding market structure, because it's not just about when to enter and when to exit. It's about understanding why the moves are happening. Because when you understand why the moves are happening, now at this point, you can go ahead and make money whenever you want to, whether it's December, November, August, or January or February. It doesn't matter. Now, I will say, right, it's a little bit difficult trading during, the holiday season. A lot of markets or a lot of people, institutions, I should say, they're getting ready to be closed down. They're trying to close out their books. They're trying to balance them. They're doing X, Y, and Z. It's for a number of different reasons. So the markets are going to be moving a bit more sporadically, right? They're not going to be just traditional setups. They're going to be a little bit here and there. And so, like I mentioned before, not every fair value gap gets filled. This is an imbalance right here, right? So this fair value gap was from this green candle. Then we now have this imbalance from this red candle, right? And you guys can see right here, market blasted through. Like, market has not came to retouch this imbalance right here. Will it get tested? Maybe, maybe not. We'll just have to see. I think it will, in my opinion, but it's going to take a while for that to happen. But a lot of orders, but the fast directional movement of the market caused this imbalance to happen. So that's something to just look for moving forward. But again, it goes to my point. Not every fair value gap actually gets touched. Around 70 to 80, 85% of them. This is the 15 to 30%, right? So just react to the market with what you're given at the end of the day, okay? But if you understand SMC, you understand order flow, you understand how the market moves, you'll be able to make money no matter what, okay? But anyways, I want to keep this video quick. I don't want to be on here for too much longer. That's essentially the setup that I have. It was a great setup. Honestly, this was a plus setup in my opinion. I think I had I had zero drawdown when it came to this trade. Zero drawdown. The market moved the way it needed to. It moved relatively quickly. And now for next week, I'll look to see, if the market's going to fill up this imbalance on the higher time frame. If it is, great. If it doesn't, no worries. We'll go ahead and we'll just go from there. All right. But hopefully you guys enjoyed this video. If you have any questions about day trading, again, I have a free Discord in the link in the description. You can go ahead and join that, and you can just see everything that I talk about and everything that I have to offer. All right. But with that being said, I hope you guys have a great rest of your day. And again, happy trading.